Life can get hectic when you start a family, but which can help you make confident decisions from improving your home to financial planning. We'll make sure you're prepared. Whether you're looking to reduce your household bills, seeking advice around your child's health, or want to find our best buys for your new home, Which has got you covered. Use our expert advice to make the right choices for you and your growing family by visiting which.co.uk/growing family. That's where you'll find everything you need to make confident decisions and have peace of mind that all the advice you're getting is 100% independent. So to find out more, just head to which.co.uk/growing family.
When life gives you questions, Which? Get answers.
Hello and welcome to the Which Money Podcast, your weekly hit of money news and personal finance hacks to help make you better off. I'm James Rowe in for Lucia Ariano, and here's what's coming up this week.
It's clear that in the short term, buying a home isn't going to get much cheaper, if at all. And in fact, it's going to get more expensive for quite a lot of people.
In many cases, landlords will see their stamp duty bill double between what it was meant to be just over a week or so ago. And of course, the nil rate thresholds are coming down again in April. And that's cash that landlords have got to find. You can't kind of leverage that sort of money.
This week we're talking about housing. In last week's autumn budget, Rachel Reeves announced a raft of changes that will impact first-time buyers, movers and second homeowners. But how will it impact you and how will the market react? Well, to help us answer those questions and many more, let's welcome Stephen Maunder, which is resident mortgage man. Hello.
Hi James, how you doing?
Very good, thanks. And Aneisha Beveridge, Head of Research at Hamptons. Hello.
Hi.
Good to have you both here. To start with then, is it possible to sum up whether last week's budget was good news or bad news for homeowners and first-time buyers? Who wants to take this one first?
Well, that's a very difficult question to answer.
It's a tough one to begin with.
I actually think it was a bit of a damp squib, to be honest. We didn't see the kinds of policies that will improve affordability for first-time buyers and stimulate growth in that area of the market. A lot of the announcements we did see that were to do with housing were kind of theoretical, lots of numbers around investment into social house building, overall house building plans, but we get those in every budget from every government, and it's actually quite hard to gauge in the short term what impact that has. The message I got from the budget, and I don't know about you, Aneisha, but it's clear that in the short term, buying a home isn't going to get much cheaper, if at all. And in fact, it's going to get more expensive for quite a lot of people. And I think first-time buyers in particular might be just a little bit disappointed that there wasn't a big kind of announcement to free them up to get their first homes.
I think what it did do, though, is there was so much sort of anxiety leading up to this budget. There were a lot of rumours, a lot of leaks, and it does kind of mean that we've got a little bit more clarity about what people can expect in the future, and that's always a good thing for the housing market. And I think just generally the sort of tax hikes, even though they were sort of fairly well targeted at quite affluent individuals, some of the tax changes, such as kind of freezing the income tax thresholds, will have a big impact on the mainstream market as well. It will certainly impact affordability because people will start paying more tax as and when their incomes rise over time. So, yeah, I think generally everyone is going to feel something from this budget, whether they feel it today or in a couple of years' time.
Well, I think it's fair to say that stamp duty will probably have the biggest impact. Shall we focus on second homeowners and landlords to begin with? Stephen, what's the big change there?
So previously, people buying second homes or buy-to-let properties would have to pay a 3% additional stamp duty surcharge, 3 percentage points on top of the standard rates. This is going up to 5%. In fact, it's already gone up to 5%. It happened overnight from the budget, which is quite remarkable, really. You can imagine some conveyancers, landlords, second home buyers sweating on Wednesday afternoon when they realised their tax bill might be rising by thousands of pounds unless they completed on that day.
So it wasn't even a warning for a lot of people who were in that process? No,
actually, it was probably the thing in the budget that surprised me the most. I think we have seen in other areas surcharges being increased up to 4%, etc. But I don't think we expected 2 percentage points now. I think that was a big surprise. And I think we worked out that if a landlord bought an average price UK home, they'd be looking at a tax bill rise of about £5,000. Obviously not just landlords affected. We've also got people buying holiday homes, second homes. And I think it's the latest thing. I think that's why we have a lot of readers here at Which who have second properties or buy-to-lets, but they're usually people who maybe only have one additional property. And it's the latest thing after years and years of reforms affecting people in this area. And it really feels like we're moving closer and closer to the whole of the buy-to-let sector essentially being professionalised and moving away from the individual landlord, the individual property investor. And I know this is something that Aneisha and Hamptons have done a lot of work on in the past around like landlords selling up, etc. So she might be able to explain a bit better than I can how it will affect the market.
Yeah, I agree. It's just an extra sort of thing that landlords are going to have to kind of deal with going forward. And in many cases, landlords will see their stamp duty bill double between what it was meant to be just over a week or so ago. And of course, the nil rate thresholds are coming down again in April. So there is and that's cash that landlords have got to find. You can't kind of leverage that sort of money. So it is kind of very much increasing the barriers to entry into buy-to-let, and it will act as a disincentive ultimately. We know that landlord purchases are already at a record low. They're purchasing around 10% of homes sold across Great Britain. And the OBR, when they were doing all of their big forecasts on the back of the budget, think that in the longer term, buy-to-let purchases will probably fall by another 25%. So that probably puts landlord purchases making up around 7 to 8% of all sales every year. And that's big, actually. That will have quite big consequences for the rental market in particular. And if anything, I guess the downside to this policy is that it's probably going to put a little bit more pressure on rents going forward, which is bad news for tenants.
I was going to say, I think, Stephen, you mentioned on average it's a £5,000 increase. It's not insignificant, is it, for people who are wanting to get into this kind of thing?
No, not at all. And not on top, as Stephen was saying, on top of everything else. So regulatory changes kind of pushing costs up. Broader inflation has already made sort of service charges, insurance, all of those things more expensive. And of course, the big thing is mortgage rates too. They're not going to be reaching the lows that we saw kind of 4 or 5 years ago when a lot of people or more people bought into buy-to-let. It is very difficult for landlords. But I would say with stamp duty, although it is an extra cost, spread out over quite a long ownership period, and when we talk about the sector kind of professionalising, landlords don't trade properties very often. They typically own for more than 10 years. So a £5,000 kind of hike in general over a 10-year period, it's painful, but it's not. You can still make it work, I guess.
And you sort of took us through some of those stats as well about the decline in that market. Is it going to put even more people off, do you think? Is it fair to say that that's probably what's going to happen?
Yeah, I think it probably will. I mean, landlords always find opportunities. I think it will probably cause a few more distortions in the rental market, which is something I'm a little bit worried about. So we've already seen a lot more landlords focus on purchasing properties further in the north where they're cheaper. So you've got smaller stamp duty costs, smaller deposits needed, and yields tend to be higher. So you're basically making more money from what you put down. And I just worry that all of this is just going to put more pressure on those kind of behaviours. So basically fewer landlords buying into London, the south, which is where we know first-time buyers are finding it hardest to buy. And we need a healthy rental market to kind of home other people.
What about stamp duty for everybody else then? So first-time buyers and movers, they're not going to be immune either, are they, Stephen?
No. And I think this for people kind of buying their first home, especially in the southeast, will be a big kind of source of disappointment, to be honest. So just to give some background, essentially first-time buyers only pay stamp duty on the amount over £425,000 currently, while home movers, so people who already own a home and are moving to another one, pay on the amount over £250,000. This is a temporary relief that was introduced by the last government, I think in late 2022.
Post-mini budget.
Yes, post the budget that we don't speak of. But essentially what's happening from 31st of March next year, so from 1st of April, that is lapsing. So first-time buyers will now pay on anything over $300,000, and for home movers, it'll be going back down to $125,000. Now, the main effects for first-time buyers have obviously been more expensive markets. So if you're buying in London South East, if you're buying in cities such as Oxford, Cambridge, etc., you will see your stamp duty bill go from, in a lot of cases, zero up to several £1,000s or more. For home movers, the impact, I think we worked out, is going to be £2,500 for most homeowners who are affected. It's really important to say that this isn't a government policy announced in the budget. This is a relief that was due to expire and the government has chosen not to extend it. And it surprises me a little because before the election, we saw the Conservative government were essentially saying that if they got in again, they would continue to extend the relief. And I think a lot of people thought, if Labour get in, they might do something similar.
Yeah.
And they've just kind of let it elapse. So it'll be interesting to see over the next sort of year or two what other policies come in that will maybe level up. Don't want to use that phrase too often in political terms, but level up things for first-time buyers.
Because, again, this is another one of these policies, or I guess the end to a policy that is going to bring more people into that threshold, isn't it? Because, remind me of the figures, what was it? It used to be for first-time buyers, £425,000. Now it's £300,000. That's a significant decrease. So it's going to bring so many first-time buyers into that threshold, isn't it, Aneisha?
Yeah, absolutely. So currently around 8% of first-time buyers pay stamp duty under the existing rules, and that figure's set to triple from April. So we think around 26% will pay stamp duty. And as you said, it's not insignificant money. So whilst your typical mover or any mover will only see a maximum £2,500 increase in their stamp duty bill, first-time buyers can actually face a hike of over £11,000. And again, this is cash that's got to be raised and saved up for. So first-time buyers can't borrow this money as part of their mortgage. It has to really come from savings or from potentially family help, which we're obviously seeing more of. And all of this just pushes home ownership back a little bit for a lot of first-time buyers. It means having to save up for longer, stay in the rental market for longer, and that can have kind of big consequences for the market as a whole too, and particularly home ownership rates.
And remind us, this stamp duty that you have to pay, this is upfront, right? You can't spread this across a term or anything. This has to be paid. So if it's £11,000, as you say, that has to be paid upfront before you move in. Yeah,
it's cash that you have to pay to your solicitor by the day, well, pretty much on the day that you complete, on top of your deposit, which we know is a big hurdle, particularly as mortgage rates have risen. So it's very difficult for a lot of first-time buyers. That said, most first-time buyers in the kind of more middle range of the market won't kind of see as much of an impact. As Stephen was saying, it's very much those who are purchasing more expensive properties, typically in London, the south, that could potentially see that £11,000 hike.
Well, we've focused a lot on stamp duty so far, but there's a lot more to unpack. We'll chat more about first-time buyers as well as affordable housing and house prices after the break.
Next time you need to get work done on your home, or your car, or your garden, make sure you choose a trader you can trust. And don't just choose any trader, choose a Which? Trusted trader. Our trading standards professionals only endorse traders who've passed our rigorous assessment that includes credit reports, customer satisfaction surveys, reference checks, and interviews. When we say a trader's good enough to display our Which? Trusted Trader logo, you can trust us. But don't take our word for it. Search Which? Trusted Traders online to see our directory of around 4,000 traders. Every customer review you read there is verified genuine by our moderators, so you can choose with confidence. To find a local trader you can trust, search Which? Trusted Traders or go to which.co.uk/traders. That's which.co.uk/traders. Everybody needs a trader they can trust.
Welcome back to the show. Now, before the break, we touched on first-time buyers a little bit. Let's stick with that for a moment. Stephen, there was a distinct lack of announcements in there that would positively impact them.
Yeah, absolutely. I think where the previous government kind of spoke very loudly about headline-grabbing first-time buyer initiatives, this one has kind of started off on a far more circumspect footing. That's not necessarily a bad thing, because with the previous government, we saw things like starter homes being announced to huge fanfare, and no homes were built. And then we saw first homes being announced to huge fanfare, and homes have been built, but not that many. So I think this is a kind of it's sort of a change of viewpoint from a new government, that headline grabbing house building schemes with big discounts for first time buyers is not going to be their hallmark as much. And instead they appear to be trying to adopt a more nuanced approach around this idea of creating more affordable housing, maybe stimulating a bit of social house building as well. It's not as exciting though, is it? And I think one thing they have said that was in the Red Book was that they're going to review keeping the 95% mortgage guarantee scheme, which was originally introduced during COVID to encourage lenders to offer loans to people with small deposits. But I don't imagine this will have any real effect at all, because I think we did need a mortgage announcement in this budget, and ultimately there's lots of 95% mortgages already available. Availability is not the issue. Affordability is the issue. First-time buyers, 95% mortgages are paying 5.5% plus still, despite mortgage rates having fallen across most of the rest of the board. And I think what I would have liked to have seen was something around the government working with lenders to reduce that initial rate burden faced by people with small deposits, because essentially high mortgage rates mean that people can no longer afford to buy homes that otherwise, on other metrics, for example, their earnings, they would be able to. And I think that's really what's missing, not the kind of big bang housing announcement, but that more sort of nuanced affordability side of things.
You're nodding along, Aneisha. Is that something you agree with, or were you expecting to see anything in there that would sort of help push some first-time buyers along a bit?
Yeah, it's a really difficult one, and I agree with Stephen. I think it was a real shame that there weren't any more measures to help first-time buyers, and actually we kind of saw the opposite with the stamp duty cut. I was actually expecting there were certainly rumours of a reincarnation of Help to Buy, and this was one of the big government schemes that helped people who had only a 5% deposit, and it helped them because the government would essentially give them a 20% loan to value equity kind of loan, which was free for 5 years. So Help to Buy had its critics. It was kind of rumoured that it was a little bit too generous. It actually kind of pushed up property prices in some sort of areas. So it didn't get everything right. Let's be clear about that. But it got homes built, and it did help. I think it was around 387,000 first-time buyers purchased their first home between 2013 and 2023, which is arguably a more successful policy than anything we've seen. I think the mortgage guarantee scheme numbers are tiny. So we didn't see that in the budget, but I wouldn't be surprised if that potentially does come out at some point over the next 18 months, because I think they've got very, very ambitious house building targets. And you can work all you want with these supply side measures, but house builders are never going to build if the demand's not there. And that's where the affordability challenges are coming in. So I wouldn't be surprised if we see a sort of Help to Buy version 2. They probably won't even call it that, because they'll want to remove themselves very much from that older scheme. But I do feel that that's the kind of key piece missing here to kind of particularly get those house building numbers up.
Yeah, I would agree with that. Actually, I think when you look at the huge house building targets, it's like 1.5 million homes across Parliament. That's kind of like wildly optimistic, I would say.
Absolutely.
But when you've got a situation where, as you say, like we have a house building sector where so much of it is focused on maybe half a dozen scale developers, who were the ones who delivered most of Help to Buy overall, like 80 or 90% Help to Buy, the government will have to do something to incentivise and encourage those developers to build the type of homes that people who can't afford properties need to move to. And I agree with you. Yeah, I've been quite a strong critic of Help to Buy over the years, but as you say, the figures do kind of speak for themselves, in that if the aim was to enable people to buy houses, it did. That as the bottom line. So maybe that will be what we need at some point.
Yeah, I think there's ways to do it. It could definitely be sort of toned down a little bit. It possibly doesn't have to be quite as generous as the previous version of Help to Buy. And I'd also add that Help to Buy has made the government quite a lot of money too. They've realised a profit of around 700 million so far on house prices rising for people with those Help to Buy loans who have paid them back. And they're earning around £82 million a year in interest. So if some of this money can then be put back into affordable housing, housing, then actually I think there's a pretty good strong argument to make it happen in places.
So do we think affordable housing is going to help, as you've touched on both already, about how Labour campaigned so heavily, didn't they, on their pledge to build, how many new houses was it, Stephen? 1 million?
1.5 million over their term. So
that's across 5 years. Is it going to help?
Well, I think it's unlikely to happen. Will it help? Well, I guess the thing is with house building is we do need more homes, and any sort of uplift in house building is heading in the right direction. And also house building's great for the wider economy. It can help stimulate growth, which we know is severely lacking at the moment, to say the very least. But is it really going to be enough to kind of make homes more affordable? I'm not quite so sure about that one. So yeah, I think actually one of the schemes that was announced this week, which I thought was quite a good idea, is Homes England are partnering with a private company on a £54 million joint venture to actually build affordable rental homes. And I quite like this idea because I think it kind of shows a bit of a sort of cross-tenure approach to housing. So not just trying to make everyone be a home buyer. Not everyone wants to be a home buyer. And actually the rental market's a little bit more fluid. So if you can inject some more rental homes into the market, that can put downward pressure on rents quite quickly. And we know that rents have been rising a lot more than house prices over the last couple of years. So it's tenants who are in need more than anyone else. So initiatives like that, although the numbers are small, I think can actually make quite a big impact quite quickly.
And it has to be the right type of homes, doesn't it, available out there, a good range. Is there almost a battle between the government and the home builders? Do they almost have different ideas and different targets?
I think there's very much a battle in that side of things. I think developers want to build houses that they can sell and make margin on.
Yeah.
And it's quite hard for them to do that, building some of the types of houses that we need to build. Also, you have to remember to give a little bit more kind of credit to developers. They are facing increased challenges over the last 5 or 6 years since Brexit as well, with kind of staffing and that type of thing. But yeah, I think there's always going to be that kind of give or take. And I think the thing that worked for developers with Help to Buy was the fact that the equity loan enabled people to buy a home, but it also enabled them to afford rising prices of new builds. So there was still quite a decent sized margin on the developer side to incentivize them to do it.
I guess, Stephen makes a very good point. They are developers and house builders are private companies most of the time, and they want to make profit. It's all about sort of profit for them. So that's kind of why we've seen them particularly focus on kind of flats in the lead up to COVID. We saw so many big city centre flats that were built, and we know that now demand has kind of changed for that style of property. I think actually where we're really missing a bit of a trick in the UK is actually downsizer tailored properties. We're not kind of building the types of property that downsizers want to move to. And you see schemes like in Australia and America where, okay, they have a little bit more land than us. That's very true. But you have these sort of amazing developments that are purely kind of tailored towards downsizers. And that might just kind of get things moving sort of up and down the ladder a little bit more, which is ultimately what we need. We need a little bit more mobility in the housing market.
I think it's really important that the government can help by defining what affordable housing means. I think when we looked to put some advice together on this, we found sort of 13 or 14 different schemes, ranging from really quite small specific ones to far more widespread ones. And what this means is people don't really understand the options available to them. They don't really understand how the criteria works with anything, what kind of income they need to have, if it's available in their area. I think this was the problem with first homes, which were due to be sold, I think, at a 30% discount to first-time buyers, is the mechanism for applying for them was essentially go on the Share to Buy website, which contains shared ownership properties, all sorts of other properties, and just find something available under the scheme. And it's kind of pushing quite a lot of complex research and understanding onto the consumer, where I think the government really needs to make these journeys a little bit clearer. And I'm hoping that a new government might bring that in the sort of medium term.
Should we touch on social housing now? Rents are going up, Stephen. How much by and why?
So the government is looking to increase social rents by CPI inflation plus 1%. I think inflation is currently at 1.7%. So if that happened right now, it would be 2.7%. The idea behind this is to give councils and housing associations some greater long-term certainty about budgeting and hopefully allow them to start to stimulate their own kind of house building initiatives. Because one thing we've heard so much about over the last decade, and obviously things like Right to Buy come into this as well, is the lack of social housing homes, ultimately, homes being sold off and not replaced. And what councils and housing associations are saying is, well, we need clarity over income before we can work out how to come up with new strategies. So the government is saying that essentially this idea of fixing it by inflation plus 1% will be either on a 5 or 10 year settlement, which should give that longer term view. The impact, obviously, for people who are living in socially rented housing is higher rents. And as it's linked to inflation, the kind of doomsday scenario here is inflation starts rising again, which increases rents kind of exponentially for people. Obviously, we're hoping that won't happen. We're hoping inflation will trend downwards. But that will then result in a bigger expenditure for government as well, because it will push more people into housing benefit. So the government really needs to carefully find the balance with how it stimulates this extra income for the social sector without creating mass unaffordability, essentially.
Yeah, I completely agree. And actually, it's very easy to get kind of swept up in what's happened to rents over the last couple of years, because we have seen rents kind of skyrocket, to be honest. Last year, I think the typical rent on a newly let property across Great Britain, not just affordable, this is more private rents, was up around kind of 12% year on year, which is just sort of unprecedented growth. Pre kind of COVID times, when rents were rising kind of between 2 to 3%, which was fairly affordable, fairly kind of manageable. But we've learned so much over the last couple of years about what can kind of change that dynamic. And as Stephen said, it's all about sort of giving those local authorities that kind of long-term clarity to be able to plan. But what happens if rents do continue rising an awful lot on the private rental market? It just kind of opens that gap up even more.
Well, we've talked about quite a lot of numbers today already, haven't we? Let me give you another one. £1 billion, that's what's been pledged to accelerate the removal of dangerous cladding on flats across the country. How quickly can this happen, and how quickly will it help those in flats with the cladding be able to sell confidently?
It's really good to see this prioritised and set out in black and white in the budget. Obviously, we don't know quite how far this fund will go. There have been various other funds around remediation on building safety over the last sort of 5 years. Cladding remediation is a really long-term job. There's lots of factors involved, not least the limited number of people who are qualified to inspect and grade cladding to start with, which is what has caused some people who realised very quickly that they had unsafe cladding, and they've had to wait a long time even to have it looked at, and then the actual process of removing it can run to years. Ultimately, just for one block of flats, you could be looking at having 18 months with scaffolding and nets in front of your property, which has a variety of effects on people. I think preventing them from selling, because obviously mortgage lenders won't lend on properties unless some will lend if they have clear clarity that the plan is in place to replace the cladding, but they won't lend otherwise. Damage to your kind of day-to-day lives, mental health, making you feel unsafe in your own home. It's really been an awful situation for many thousands of kind of homeowners over the last 5, 6, 7 years, and just really hope this can be a tangible, positive step forward for them.
Because there's been, in the news since Grenfell, and what was that, 2017, wasn't it? So we've been going on for the best part of a decade now. Aneisha, this is definitely a positive step forward for this, isn't it?
Oh, hugely. It's definitely a step in the right direction. But one of the sort of issues with the initial funding actually was that it came with quite strict criteria. So my understanding was that it was only available on buildings over a certain height. So I think the building had to be over 18 metres, and it was actually only available to owner occupiers. So for example, blocks that were predominantly owned by private landlords or even local authorities, I believe, have really struggled to get those kind of remediation works kind of done. So any extra funding is absolutely great, but it does need to be able to help everyone. And I think that's the bit that's possibly missing at the moment.
Now, before we wrap up, can we touch on house prices? Where are they at right now? And will we, do you think, see much movement over the next few months? Aneisha, do you want to take this one first?
Well, house prices are still up year on year, so we're heading in a positive direction. The pace of growth has kind of slowed a little bit, so generally house prices are rising between kind of 2 to 3% year on year. And really, I don't see any reason why that would change. I think we've been a little bit doom and gloom today, actually, haven't we?
Sorry.
But no, and then there are lots of reasons to be a little bit pessimistic, but I think the economic backdrop is such that the affordability picture has improved for a lot of buyers. We've seen wages rise quite a lot over the last year or so. They've been outpacing inflation, which has left a bit more money in all of our pockets. And of course, the big thing is that mortgage rates have come down by a fair amount, actually, over the last sort of 12 months. So things seem to be heading in the right direction, and we're forecasting kind of more house price growth next year. But yeah, with a little bit of caution, because we know how quickly things can change, and it'll be interesting to see what the bank do this week over interest rate cuts too.
Stephen, anything to add there?
No, I think it's a delicate balance at the moment. As you say, we're seeing house prices going up 2 or 3% across kind of the various different indices we have. And nothing that's happened in the budget should affect that, I wouldn't have thought. If in a year's time the base rate's down at 3.5% rather than 5%, we could reach a market where those 2 or 3% increases start becoming 5 or 6% increases in the sort of medium term, perhaps. But
that's very positive.
Yeah, I know. I think I can't imagine the sort of like rocket-fueled property market will be coming back anytime soon. And to be honest, a kind of a period of slow and steady increases is not necessarily a bad thing. We don't want to see house prices fall through the floor, and it's not good for the market for them to skyrocket either.
Well, you've both touched on the base rate. We're recording on Tuesday. People will be listening to this on Friday onwards. So I would like to just get a prediction ahead of time, and then we can find out if you're right. What do we think is going to happen on Thursday?
Well, I'm going to caveat this because there's definitely a lot more uncertainty around post-budget. And actually, financial markets have become a little bit more jittery. And they're basically, the question is will the Bank of England kind of stick to their rate cutting plan? Or does all of this extra kind of fiscal spending mean that rates may have to stay higher for longer? And that's going to be a bit of a balancing act that I'm sure they'll be grappling with. My personal view is that I think the scene is set for a rate cut this week. I think it will only be 0.25%, as we've seen over the last few. But I think this possibly might be the only one that we see this year, whereas previously markets were expecting one this month and one next month. But yeah, I'm on one cut for the rest of the year is my prediction as of today.
Stephen?
I think we're sharing notes because I have written down here, lending sector becoming edgy, base rate will go down by 0.25 percentage points. Doubtful we'll get another reduction in
there
December.
You go.
So I think we're agreed on that one.
But positive that you both still think it has a chance of coming down.
Yeah, I think definitely the direction of travel from the Bank of England is quite clear, and that's that the rates will continue to fall, but the question is kind of how quickly and how severely, and there's a lot of factors still at play for that. But inflation's heading in the right direction. It might pick up a little bit, but again, that's broadly expected. Yeah, we're sort of predicting probably one more rate cut this year and probably around 4 next year. But where the rate settles in the long term is really what's going to dictate the housing market. So we'll wait and see.
We shall indeed. I think we've covered quite a lot today. Plenty of great advice in there as well. Thank you both for coming on today's show.
Thank you for having us.
Thank you indeed.
Well, a huge thanks to Stephen and Aneisha for coming on the show today, and to you for listening to this week's episode of the Which Money podcast. If you enjoyed today's show, please do hit subscribe to make sure you catch our new episodes as soon as they drop. For daily money news and advice, you can find us on social media at Which Money and online at which.co.uk/money. And we also have a free money newsletter, which is delivered to your inbox every Monday. To sign up, visit which.co.uk/money newsletter. This episode of the Which Money podcast was produced and presented by me, James Rowe, and recorded by Rob Lily Jones.
If you're enjoying this podcast from us here at Which, then why not become a Which member? Right now, we've got a special offer, especially for podcast listeners, meaning you can choose any of our 3 membership tiers for 50% off the usual price. Starting at just £39.50 for a full year, you can get Which magazine delivered direct to your door. For the same price, you could also choose a digital Which subscription, giving you access to all of our product reviews, the Which app, and the digital edition of Which magazine. What's more, you'll also be able to use the Ask Which service for personalised one-to-one buying advice. Or why not get a full access Which subscription for just £49.50 for a full year? Don't forget, that's 50% off the usual price. To join Which or to find out more, just head to which.co.uk/podcast offer. That's which.co.uk/podcast offer. Or click the link in the description for today's podcast for 50% off a Which annual subscription.